Bitcoin could remain under pressure because several miners are likely to go bust, overshadowing improving macroeconomic conditions, according to investment firm VanEck. All right, joining us now to discuss is Marathon Digital CEO Fred Thiel. Welcome, Fred, to this show. So, as I mentioned, VanEck is suggesting that a wave of miners are going to go bust. And what are your thoughts on that?
I think we've seen in the news that there are a number of miners under pressure. Core had announced that they were suspending payments to certain financing partners. Argo similarly had announced challenges. There was a bit of kind of fake news out last week that Argo was going to file for Chapter 11. It looks like they are getting financing to dodge that bullet. B. Riley yesterday sent out an open letter to Core and Scientific and their shareholders regarding wanting to be kind of a backstop, provided they could meet certain conditions to avoid going into bankruptcy. I think bankruptcy is a very difficult and challenging situation for a miner. We've had, the Compute North bankruptcy this year already, and there are potentially others. We're in a market right now where the price of Bitcoin, high cost of energy, low Bitcoin, and very tight capital markets, or even capital markets shut off for certain miners, make it very difficult to operate profitably, especially those miners that have large equipment financing commitments. The challenge is, I think in Argo's case, is they have to pay upwards of $4 million a month in equipment financing payments, and they may be able to generate about that much Bitcoin. So how do they pay their energy bills, et cetera, while they're doing that? So I think it's a challenging environment. And some miners are definitely struggling. CleanSpark, there was an announcement this week as well that they're not going to hit their hash rate targets, but that's mostly because their hosting partner Lancium, I guess, is unable to fund the build out of the sites where they're going to connect. So it's definitely a challenging environment for.
You mentioned Core Scientific, and they've warned that they could go bust by the end of the year, but now investment bank B. Riley wants to lend them $72 million to avoid bankruptcy, saying that most of the struggling miners' issues are, quote, self-imposed and can be corrected. Do you see this as an exception? Is it wise or risky?
Yeah, I'm not going to go into the details of Core's challenges. Part of it is you sell hosting at a fixed price, but you don't have a fixed price on your energy, and when the energy markets get out of whack, you lose money with every terahash that you're running. They also have challenges because of the Celsius mining bankruptcy, where because of the rules around bankruptcy and stays, they have to continue providing Celsius service. They can't stop it, yet Celsius isn't paying. So there are challenges there. So are those self-inflicted or not? Well, you can argue it either way. But I think most of the challenges are related to rapid growth. People really trying to grow as fast as they could last year and the year before, when capital was easy. And the constraints were around miners and hosting, and people that chose the wrong ways to finance that are upside down at the moment.
So how are miners surviving when Bitcoin is so low and we see energy costs a lot higher than they used to be?
It kind of depends on the type of energy agreements that miners have. If you're on a fixed PPA where you have to take the energy, hopefully your fixed price is attractive, and otherwise you can sell that energy back to the grid if there's a good arbitrage opportunity, and that's certainly something that companies like Riot do fairly frequently. If you're in a situation where you're on the hook for the energy and energy prices spike and you're mining at a loss, then that's definitely a challenge. And then the question is, what's the balance sheet of the miner look like, and what's their ability to support those kind of losses, and for how long?
So do you think there are mining outfits right now that are definitely going out of business that we just don't know about yet?
I would say that they're definitely, think about it this way. There are 20 plus publicly traded miners. And I think that a lot of those miners are not healthy at the moment. And depending on what they do, we'll see what happens. There are a lot of smaller, privately held miners that also potentially are at risk. But I think it's going to be very interesting. If this environment continues with low Bitcoin price, high energy prices, through Q1 and into Q2, I think you're going to see some, more casualties.
So how is Marathon weathering the storm? I understand that Marathon expects to recover only about half of the $50 million that it deposited with Compy North, which is now a bankrupt Bitcoin miner and data center. How are you weathering the storm?
We're doing well. We just paid down $20 million on our revolver, and we'll likely continue to pay down debt over the course of the year. We have a strong balance sheet. We have a lot of miners that are being deployed and installed that have already been paid for, essentially. So, we're at about a little over 7 exahash now. Next year, by mid next year, we'll be at 23 exahash. That's a 3x increase with de minimis capex expenses related to it because we've already paid for that mostly. So we're super excited. We'll start seeing more miners come online starting in January through kind of July next year.
Are you having to sell Bitcoin?
No, we haven't sold any Bitcoin. I think now we're the second largest publicly traded company that holds Bitcoin with over 11,000 coins in the balance sheet. So also by paying down our debt, which we've been doing, it frees up our collateral, which is the Bitcoin, and makes it unrestricted. So, our whole goal right now is to kind of end this year with a very strong balance sheet and be able to weather whatever storms happen next year. We're not going anywhere. We're looking forward to an environment where Bitcoin starts moving back up in price as the macro environment improves in the back half of next year. We feel very confident that the market's going to be much better for the mining industry come the back half of next year.